Hello and welcome to another update on HBAR. The HBAR chart continues to be in this correction. 14.2 cents remains the last, you could say, reliable ultimate support area or level for this AB or 1-2 setup that started to form in April. Yeah, around the 7th of April, we had a 5-wave move up. Again, a diagonal pattern, not an impulse. That's always a problem. And then we have a pullback, which, to be honest, just visually starts to look like 5 waves. So again, we have some levels to watch there, but so far the market has not generated an impulsive upside reversal in what would be this wave 1 from the June low. Okay, so you might hear the dog in the background there. We don't have a 5-wave move up yet. There was one really on the micro level, but that was too small to be counted as this wave 1. Okay, wave 1 of 3. If this is really bullish, a third wave should take us next. But really only as long as we're holding 14.2 cents. I mean, below that level, we can start to assume that maybe the bull market finished. We have to see. The larger structure still allows for another attempt from here to rally in a third wave, but we need some evidence that really the market starts an uptrend from here, right? I mean, this is a support area to watch. We have a potential uptrend and a pullback. But normally we say that below the 78.6 retracement, the upside reversal attempt is starting to fail. So it's something to consider. For now, though, there is absolutely no evidence that a low is in. Yeah, with that break below the previous June low, we have to wait for new evidence for a low, and that would involve a 5-wave move up that breaks above the previous swing high here from June at around 18.3 cents, and a higher low, a corrective pullback. That would be probably the best setup you can get, like a 1-2-1-2 setup. Yeah. For now, we have a 5-wave move up that's questionable, because it's a diagonal from the April low and the pullback, but to now get evidence that this correction, which started already more than a month, more than a month ago, we need another 5-wave move up on the micro level, followed by a 3-wave pullback. So watching this area for reaction, maybe next week or so, could be very, very important, and that could set the stage for a third wave rally. Now, it's important to understand the white scenario as well. So if this setup plays out, then the rally could also be a C wave. I would expect resistance in the area around 28 cents, but for now, the focus is on whether the bulls can show up here. Looking at the shorter time frame, you can see here the 4-hour time frame, and you see the structure in a little bit more detail. You see here the 5-wave move up from the April low, and you can also see that we can consider the move down still as a 3-wave move, even though this 4th wave is very messy, bit large, but possible if this was an ending diagonal to the downside, but still messy. What we need to see now is a break, as I said, above that 18.4, 18.3 cent level, ideally in 5 waves. That would give us some confirmation that a low is in. For now, I'm watching. I think there was a promising start here on the 5th of June, but you clearly see the market fail to form 5 waves, which is why I always say without a 5-wave move, the structure is extremely fragile. So it formed only 3 waves, which is corrective, and now it's dipped back into support, but still holding support. Still holding support. Not failed yet, this upside reversal attempt, but the 14.2 cent level basically acts as a pivot between bullish and bearish momentum. So far there was no impulse. Okay, there hasn't been any impulse. There's been a 5-wave move up, which we label as a diagonal, and no impulse since the pullback started from the May high. So the next support is at 14.2 cents. Below that, we're entering no man's land, and probabilities for a successful upside reversal will reduce significantly, at least in this 1-2 setup. And the formal invalidation point for the 1-2 setup is here this. That's the 12.5 cent level. That's really the formal invalidation point, and there is no wiggle room anymore. Good reward to risk ratio from this area, yeah, but we also need some upside momentum from here. In addition, we're watching Bitcoin. So I guess from checking our Bitcoin chart, you know that basically an upside reversal from here is seen as a bit speculative because things don't really align there, but still watching it. Always important to consider the wider sector as well. And so far across the sector, there aren't really any clearly bullish signals. There were after the 5th of June low, but it clearly failed. So market needs to make another attempt. Could happen next week. So we'll pay close attention to these. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.